All right, good morning then, traders, as we head into European trade on Thursday, the 12th of October. And it is CPI day, the busy day of the week, or certainly the most heavily looked at day of the week when we looked through the economic calendar for the week. So we'll have a little bit of a look at CPI a little bit later on. What we might expect as we head into some inflation figures from the US tomorrow. But we had the minutes last night. The Fed kind of uncertain going forward. I mean, there was a part of the statement that said a vast majority of participants continued to judge the future path of the economy as highly uncertain, supporting the case for proceeding carefully before raising the Fed's benchmark overnight interest rate again. So, I mean, they did suggest with their dot plot they were going to hike interest rates again for the back end of this year, but rising global potential for rising global energy costs, rising global food costs, also central banks around the world with tight monetary policy causing difficult for global trade, or difficulties for global trade, should I say. It doesn't make for a great reading for the global economy. Obviously, if the global economy is struggling, the US cannot continue to outperform just by themselves. They do need the rest of the global economy to push higher with them, or at least hold firm with them. So, there's certain things within the economy that would suggest maybe there's a lack of a need for a further interest rate hike, and as they said last night, they are going to proceed carefully. Right, they do proceed carefully. That means that they will watch the incoming economic data. Now, we did have economic data yesterday, PPI, higher than expected. Some of the underlying figures, maybe slightly deflationary if you break down the number individually, but comes around to CPI today, and that's obviously the more important one for prices on the consumer. But prices for the producer rising, whichever way you look at it, doesn't make for a great reading for the consumer price inflation. There's a bit of a lag effect for the PPI, but let's see at 1:30 how that plays out today. We'll have a look at the numbers now in a minute. Consensus, what we're expecting, and then coming out as and when we get to it. GDP in the UK, you can see sterling nudges lower after the data shows UK economy grew 0.2% in August, which is in line with estimates, but shrank more than initially thought in July. So numbers were downgraded for July, in line with expectations for August, which is 0.2%. It's a pretty normal growth rate over the month of August. BOJ official hints at continued stimulus, so expecting to continue stimulus. Some market participants think they may raise the ceiling on their 10-year yield. They probably won't want to signal that again. You'd have to imagine they'll probably wait for the upper band of their 1% band to be tested aggressively before going and jumping down, or going down that route, to be perfectly honest with you. But they hinted things, hinted this, hinted that, but ultimately, their yields tracked US peers lower. Their yields track lower. There's no need for them to go raising any sort of upper band for their 10-year. Plus, if they go and do that, it will kind of reduce their credibility, saying that they're not going to hike interest rates soon. If they keep doing that, you have to imagine that they will look at hiking interest rates at some point. So it's something we got to keep an eye on going forward. This is something we need to keep that much of an eye on. I'm not so sure just yet. Apart from that, not a great deal, not much more kind of market moving information out of the Middle East. So have a look though. Stocks higher across the board. You can see European, US and Asia Pacific equities higher across the board. Talks of extra Chinese stimulus, talks of Bank of Japan stimulus continuing, giving a boost to Asian stocks, which has had a bit of a follow through in European and North American stocks into the European Open this morning. 1 week percentage change positive, month to date percentage change positive across the majority of them. Certainly a bullish week on equities over the last week in the midst of the Middle Eastern situation. Certainly a bit interesting, isn't it? But normally with these crises, with wars and stuff, normally they do spark a bit of a rally. Maybe people try to get short off the back of it, and there's a run on stops higher. But anyways, bullish stocks for now, probably helped by the fact that yields are pushing lower. probably more help, but more help by the fact that yields are pushing lower. You see yields globally lower across the board, sending stocks higher. A bit of a cooling down in interest rates, a bit of a push lower on interest rates, which is supportive for stocks. You then get a situation where, you know, market participants probably looking at the Fed not delivering on that interest rate hike that they had said they were going to, or looking at delivering on. It now becomes a story of the economic data. No, we are going to hike interest rates again, which negative for US dollars, positive for stocks. Hasn't really relayed or crossed into the currency space, into FX land, but US dollars lower across the board, yields lower across the board, stocks higher does make sense on that side of things. Rest of FX isn't really playing ball, but shows you how markets are setting up. Markets, I think, are setting up over the course of this week, like long stock, short dollars. They look like they're setting up for a weekend, for a weak CPI print today. There's the pain trade the other way. Let's see. But if it does come in higher than anticipated, and the dollar doesn't push higher, well, that shows you, I think, everything that you need to know about what we've been looking at in recent trading sessions. So we come back to the calendar. Let me flick this back to this week, and we'll scroll down to Thursday. You can see CPI. We got core CPI and obviously the headline CPI figure. Headline CPI expected to drop by 0.1% down to 3.6. Headline CPI month over month, 0.3% growth over the month of September. Then you got the core CPI prints. Core CPI year over year expected to tick lower. Core CPI month over month expected to remain the same at 0.3%, which is still a little bit high for them, a little bit higher than they would want, but ultimately at the end of the day, it's not terrible inflation prints. 4.1% the core CPI. They want it lower than that, but where do we take markets then after this? Right, markets seemingly setting up for a weak print. So we get the weak print, you short dollars, long bonds, long stocks. Right. On the flip side, though, we saw PPI yesterday. Right, PPI came out yesterday, and albeit we didn't have the minutes, but the US dollar failed to gather much strength off the back of a strong PPI and a core PPI print yesterday. Right, so if the currency cannot rally off the back of positive news, what other way does it have to go? Obviously, that's down. Right, if this then pops higher, core CPI and then CPI pops higher, beats estimates, and we still don't get a US dollar rally, that kind of reaffirms my stance that the US dollar uptrend seems over. That has, you know, proved correct since last week when I started saying it, but really it's not much of a trend change. It's a bit of a trend change, could still be a counter trend on a higher time frame, but ultimately, you know, the US dollar has come in nearly a couple of 100 pips, 150 pips at this point in time, which is obviously not a massive amount when you see the size of this trend, but you've had 1, 2, 3, 4, 5, 6, 7 or 6 down days in a row, down again in today's session to make it a 7th. You know, do we continue on lower? Obviously it remains to be seen, but if the US dollar struggles to rally off the back of good news, failed to rally off the back of good news, back of PPI yesterday, then sold back into just with the minutes sent the back lower. But if you do get a pop higher on CPI, and then it does pop lower again, reaffirms that stance. But ultimately, if they're going to be data dependent and this beats it aggressively, and probably a little bit difficult to trade, or not probably, will be a little bit difficult to trade, but may give us a good indication as to where markets may move going forward. But US dollars across the board weak at the moment. Equities strong across the board, as you can see, with your S&P, your Dow Jones, Nasdaq, Russell, DAX, Euro stocks, and the FTSE all higher in today's session so far. The VIX selling off into the close yesterday. Again, a further positive for stock indexes across the board. You can see yields pushing lower, certainly the 10-year yield pushing lower, which again is lending some support to stocks. You see oil lower off the back of those Saudi Arabian comments that we'd mentioned the other day. Gold continuing to push higher with that 10-year yield pushing lower. Bit of ongoing dollar weakness, yields pushing lower, and a double positive for the price of gold. And apart from that, that's how you probably have to play it into CPI today. CPI 130 today is the main focus of attention for this week on the economic calendar. It's been short dollars, long stocks, long bonds, which is obviously short yields, then into it. Is that how it plays out at 130? Let's wait and see.